guys? How are you doing? I hope you can see me properly. I was gonna do this video like this, yay, so you don't have to see my hair, which is so shaggy right now, and I know some fashion police will be telling me to shave. I will shave soon, don't worry, fashion police. Anyway, I think it looks weird that way, so I'm just gonna do it like this, and you can just see my horrible hair, which is not horrible, at least in my opinion, but yeah. Anyways, guys, hope you're well, hope everything is fine. Today we're gonna be doing something interesting about investments. I know people are constantly looking for investments, especially in this with this current environment, with a lot of things happening, a lot of things going on. You're thinking, how can you actually make money? How can you actually look for really good solid investments? But in that same vein, as you look for those solid investments, we need to be sure that you're taking the right investments. So there are certain investments in Kenya, and one is called Mansa-X. So I want to review Mansa-X because I did a video initially, which I'll link somewhere here, of Mansa-X, and I was just doing more like, just a review of that particular investment. It's a fund. But now I want to go through it and look at the risks and disadvantages. I always say, before someone gives you money, make sure you know what they're getting out of it. Before someone gives you good returns, make sure you know what they're getting out of those good returns. So today I want us to go through the risks, as I promised in that video that I would do it, the risks and disadvantages of investing in Mansa-X. They give quite solid returns, and that's why probably it's a good investment to review. So what I'm going to do is go through the basic information, and then we're going to go through some risks and some disadvantages of this particular fund. And that's because it's just good that I give you a view of both sides. Last time I said probably it's the best investment right now, and now I'm saying, as you go into it, look at the disadvantages of the risks. The same way I do with bonds, which I like so much. Recently I did a video on bonds and why you should be careful putting your money in bonds, despite how much I love them. So the thing is, you have to be a bit logical. You have to be objective while you're doing your analysis with any investment, because no investment is just there to serve you. Okay, so you want to look at the backside, you want to look at the disadvantages and the risks that you're taking as an investor before you buy any kind of investment. So we're going to review Mansa-X. We're going to look at some of the things. I believe this is my opinion and not financial advice, and please, I'm not working with Mansa-X. If they want to work with me, please come, Mansa-X, no worries. But at the moment, I'm just doing a really good review of a good product, which I believe is generally a good product, giving good returns, at least from 2019 when it was initiated. So let's dive into my laptop. You won't be seeing my crazy face, and then I'm going to show my screen. We're going to go through a few things that you should consider as you invest in Mansa-X. I'm not saying these reasons will be preventing you from investing in Mansa-X. I'm just saying you need to be aware and careful, and make sure it meets your needs. Make sure the investment meets your needs. Then the economic environment has changed now, so Mansa-X giving us 17% isn't as great, but I still believe for stocks it's an amazing return, especially because it's managed by the fund managers and professional fund managers, and they do trading, active trading. So I'm sure they rebalance the portfolio all the time depending on the economic environment. I think that's pretty good, and good performance from their side. But of course, now we have bonds giving us 18% safe and everything, minus the other risks as well that I've spoken about in bonds. But today it's not about bonds, today it's about Mansa-X. Let's dive in, let's go through every single thing before you buy Mansa-X. Welcome to my screen. I hope it's recording. Anyways, so I said it is a product by Standard Investment Bank. As you can see, sib.co.k, Mansa-X. Make sure you're always on the right website. I do stress this. You have to be careful with everything when it comes to investing. You're putting your money somewhere, you worked hard for it, you want to make some returns out of it. Make sure you're careful with your money. So Mansa-X is Standard Investment Bank product. Let's look at some of the details. December 2019 was licensed as a money manager in Kenya by Capital Markets Authority. It's a flagship product of SIB Global Markets Division. So basically they invest in global products or global assets. We're going to look at some of the things they invest in, but it's a multi-asset strategy fund with a long or short trading model that invests in financial instruments, both local and global, with the primary objective of realizing capital growth for its investors. Very important, right? So you want to know what your fund is investing in. You want to know where they're investing. So those people keep asking, hey, how do I invest abroad? How do I invest in international markets? If you don't want to do it directly, probably this is another route for you, depending again if it meets your objectives. And like I said, I'm not partnering with Mansa-X, so this is just a very objective analysis. Okay, so it's a complex portfolio. I understand that. It exists both in Kenya shillings and USD, which is a good thing for most people. But we're going to focus on more on the risks today. Okay, so it's a highly diversified fund investing in a wide range of assets that include currencies, precious metals, commodities, stock indices, single stocks, cash, and fixed income. Okay, so it invests in the world's major global exchanges such as the New York Exchange, the London, the Frankfurt, the Hong Kong fund exchanges. So this gives you very good exposure, right? You come down here, you find the features. Mansa X fund features. You hear the initial fee is 0%. 0% redemption fee, a minimum investment of 250,000, and that's where I find the first problem. I think it's too high a minimum investment for most people, but again, it can be a good thing for other people, right? So again, that's why I say something should work for you. So minimum investment of 250,000 will not be or might not be affordable to most people, especially in Kenya. But I still believe that again, if you want to invest in a good fund that's giving you solid returns, you might want to pull up your socks, and that's not really a very bad amount of money. But it means it locks some people out automatically. So it's still the fact that it's 250,000 as a minimum investment can be a disadvantage to most people and can lock most people who might be interested in the fund outside. It's also good because sometimes maybe they are targeting a particular group of people, they don't target everyone. So for them, it's a strategy and it works. But for the common man who wants to access this, you must have 250,000 Kenya shillings, which is not little money. Most people might struggle to get that money at once. So minimum investment is 250,000, $2,500. I don't know if they now convert it or just give them 250,000. I guess that would depend on the account. So if you're doing USD, you'll have to do 25. If you're doing in Kenya shillings, it would have to be 250,000. A minimum top up of 100,000. So it means every single time you're topping up, you have to put 100,000. I'm not sure if this minimum top up is per month or something. I might need to check that once we go into the more information document, but it means anytime you top up anyway, despite the timeline, it's $100,000. A lot of money. Again, some people might struggle to have that money and top up all the time. There's a 6-month lock-in period. So I guess when you're topping it up, then it means if you do 250,000 or your initial amount, within the 6-month period, you might not be able to top it up. I'm not sure. We'll check that out. But again, it means that if you want to top up after 6 months, you have to top up with a minimum of 100,000. So basically, at any point you're adding money, that's the minimum you're going to add. So I think that's a big disadvantage as well, because not everyone has 100,000 to spare at any point that they want to top up, or every 6 months. 6-month lock-in period, I think that's also a disadvantage to me, because I want, with such investments, you want liquidity, right? You want your money to be available, and with these global markets that sometimes can be a bit unpredictable, you want to be in a position to control, your own investments, right? So I know this is managed by professionals, but sometimes you also want to make some changes within this portfolio. You want to tell them, I want to put more money here. I want to reduce the amount of money I put into this one, whatever. So it basically is locked, it's fully controlled, so it's a bit rigid. In that sense, it gives you less flexibility, it gives you less control within the period that is locked. So once you lock it, 6 months has to go by before you do anything. I'm sure there would be other ways and fees and stuff if you really wanted the money out, but it's a lock-in period. Already that's a disadvantage to most people who want liquidity and want access to their money. Like, I invest in so many stocks, I have those ones that are fully locked in, I can never even sell them, and I have those ones that I can easily sell at any point. I can adjust. Nowadays, I can even adjust my pension. I can't access my pension, the state pension where I am, but I can actually adjust on what I want it invested in. I can even tell them, hey, don't invest my money on this particular thing, invest it heavily on this other thing. So that's a very good flexibility, even though I cannot get the money out practically or physically, but I think it gives me a lot of flexibility and freedom. So that lock-in period, I think, is a big thing. Then we have 5% financial services charge. Now, usually where I have issues with most investments that are giving like really good returns is that they also charge you quite heavily, and charges can really ramp up and eat into your investments. That's the thing. And this is one thing I want people to be careful with. I want you to understand it. Charges and fees can really eat into your investments. So 5% financial services charge, prorated daily over 365 days. And then there's a 10% performance charge, again, applied on the surplus when a return above the 25% hurdle rate is attained. So they will go and charge you. This is like an incentive. This is like a fund saying, hey, if we achieve this rate of return, we are going to charge you an incentive for our performance. So they have a 10% performance charge as long as they go above the hurdle rate of 25% rate on the Kenya Shillings Fund. And they apply a 15% performance charge on the USD fund for any rate returned above 15%, which is their hurdle rate. So you want to make sure that you know exactly what you're getting into. You want to do your calculations really well based on the amount you're investing. It's a very simple and direct calculation. You will look at the 5% financial charges that they're going to put on your account. You want to look at the 10% performance charge, the 25%, and the 15% charge if you have a USD account. So above average market returns, Mansa X has consistently delivered an average net return of 17% per annum to its clients since inception. We'll see to that anyways. I just don't know how you get a 17% net return with those kind of charges, but always try to get information about the fund, not just from the website. If you come down here, they do have information here. Even though I tried to get the presentation, there's no link, so it's not available, but I did download Mansa-X fund fact sheet, which is usually very informative for anyone who is trying to invest into anything. Q3, this is 2023 this year, and then their brochure is here as well. So if you want to understand it much better with some more details, you can always come here and download. I don't know why the presentation is not there. Anyways, so we have the summary, which is here. They put this beautiful lady to tell you that, hey, all is good, yeah. And then you come down here and you have the information you need, fund introduction, things that we've gone over already, the description of the fund. The objective is to give you above market average returns. And then they have the risk management framework. This is something you want to understand. How do they manage their risks in any company? Very important. I tell people when you're doing your research on any company, on any fund, make sure you have this information. The asset classes where they invested, you can see clearly globally. There are single stocks and indices and fixed income, derivatives, precious metals, currencies, and commodities. Locally, they have cash and cash equivalents, fixed income, NSC, derivatives, ETFs, and NSC equities. That's locally. The fund features, you can see again the same things we've gone over. The leverage, which is a negative thing actually, in my opinion. That's actually, you need to be careful. That's another disadvantage. Leverage is not a very good thing when you're investing long term, because this is a kind of fund that you want to invest for in medium to long term. So a leverage can actually really impact your investment. So it's something that you can only use once you have the knowledge, the information, and the capacity to use leverage properly. But sometimes companies can use leverage to really mess your investments up, because then they give you access to things that in normal circumstances you're not in a position to buy. So you end up carrying positions that you don't have the muscle or the financial muscle to carry. So leverage can be a positive thing for those who know how to use it. Negative thing for most people who have no financial information. Trading opportunities, that's if you want to trade, of course, you can trade. Again, I don't know if that's a good thing, but you have the platform to do it, which is a good thing. So liquidity, you can access your money, which again, they're saying you can access your money after the 6-month lock-in period. So I think this is an initial 6-month lock-in period, and then after that is easy. So that's something I need to correct. Not correct really, but because they didn't put that information on the website, that's why you need this. So the 6 months is not like, prorated, or it's not something that is continuous. It's not a cycle. So it's just 6 months initial, and then you are able to access your funds easily after that initial lock-in period. Not bad for long-term investments, medium-term to long-term, no problem if you're locking it in. Can be a problem if it was being locked in, again and again and again. Have presence of an online money manager and brokers, whatever. So they are saying if you invested 1 million in January 2019 when it was first, initiated. You can check here very clearly that it's performed at 1 million investment. We are looking at 2 million. So within within 4 years, actually, that's interesting. Within 4 years, you have more than doubled your money. Now that is a really good investment, right? It's a really good investment, and I hope that's a net return. So that's a really good investment, to be honest. And I don't want to take the count from them on that. That's a really good investment. With it, doubling your money within 4 years is amazing, because most of the time normal investments will double your money within 7 years, 7 to 8 years, probably 7. So looking at this after fees, and they say after fees, I'm just wondering how they get this kind of returns. This must be really aggressive, to be honest. But yeah, they're saying they will give you at least 2 million in those 4 years after fees. So they would have more than doubled your money, and that is awesome. So yeah, that's it for the summary. If we go into the fact sheet for Q3, let's see how it's done. The fund description, we've done over that. We've gone over the stuff they're investing. Then you have a fund overview here. Inception in January 2019. Assets under management, 17 billion Kenyan shillings, which is 15 million in the USD account, USD. Base currency is Kenyan shillings. The minimum investment here is 250,000. Top up is 100. Lock-in period, I don't know why they're not saying that this is the initial lock-in period, not just lock-in period. Looking at the performance, we can see in Q1 this year it did 4%, in Q2 4%, 4.7, Q3 4.6, not bad at all, good performance, steady. And the top holdings here, you can as well see where this money is invested, which is very important to investors. You want to understand where is your money invested. Okay, so we see Eurobond, which is very interesting considering that it's more of a, I thought it was more of a stocks thing, like picking stocks internationally. But yeah, Eurobond 21%, that's the largest holding. And then we have other stuff, Treasury note, Nasdaq, sugar, Canadian dollar, gold. You can see the 12-month performance period, and then you can see the USD performance as well. The geographical distribution of this particular fund is America, Africa, Europe, Oceania, Middle East, and Asia. Oceania is Australia nowadays. Remember, past performance is no guarantee of future performance. So as you go through these things, make sure you know what you're doing. You know that it doesn't guarantee that you will make money in the future, but disadvantages or risks are just the things I've mentioned through it. I don't see anything so bad with this particular fund. I must say I'm impressed by how they do it. I'm impressed by the performance they've maintained for 4 years. And honestly, if they can continue like that, really good, I must say. So that was Mansa X review. It's a really important part that you need to understand, that stocks are volatile. And like they said, that past performance is not a guarantee of future performance. But the most important thing is that remember the disadvantages. Remember that each time someone is giving you that kind of return, there are risks that you're taking in. Make sure you are comfortable with those risks. And like you saw the holdings, those are risky holdings. Not all of them are like stable stuff. Not all of them are like stable assets. Some of them will like fluctuate so much. So you never really can tell what's going to happen in the next 1 or 2 or 3 years or so. But investment, generally speaking, is always a risky game. So if you are up for it and you have a very solid I would say portfolio somewhere else and you want to risk some money, not a bad place to be honest. So generally speaking, I think it's a good place if you want to start some investment, and not just start from nothing, but like you want to scale up your investments, especially those people who want to go global with their investments and stuff. I hope that's been helpful in reviewing just the risk and the disadvantages of Mansa-X. If you have any information, let me know. If you are part of it and you've invested in it, let me know. And if you've seen Mansa-X, tell them to look for me, because I might just help them get a lot of clients. Otherwise, I'm out, guys. See you next time.